All right. Today we're going to talk about just the different loan programs that we offer: FHA, conventional, VA, and jumbo loans. So, Pat, why don't you start off with telling us a little bit of why we will put somebody into an FHA loan?
Well, FHA has always had that kind of that stigmatism as a first-time homebuyer program, and that's probably the farthest from the truth nowadays, right? Now it offers a wide variety of people options to get into their house for not so much money down. The rates are really good, and the qualifying is actually easier. So,
yeah, and we can do FHA loans to a very high. It used to be a low level, but we can go up to a very high loan amount now too in the Denver
do you
metro
know what
area.
the limits are on that now?
The limits are, you can go up to 484, 350 now in 2019.
That's very strong. That's
Yep.
very strong. That encompasses a large part of our market here in Denver,
Yep.
and that gives your average family the opportunity to buy a house with not so much money down and maybe a little bit easier qualifying guidelines.
Yep.
So,
And
cool.
it's with FHA, there's good and bad things about it. The great thing is, low down payment, but you do have the mortgage insurance for, if you put a little bit down, the 3.5%, you have the mortgage insurance for the life of the loan.
Yeah, so on FHA, the minimum down payment is 3.5%, right? So you got to put down at least 3.5% of the purchase price to get into an FHA loan. It does have mortgage insurance. So does conventional loans when you're putting down their minimum payment as well. And the good news is FHA in the last couple of years has made some pretty big adjustments to make their mortgage insurance premiums a lot more competitive. And some of the conventional premiums, which we'll talk about, have actually made their adjustments as well to where their premiums are more in line with FHA. So there's not as huge of a kind of a dividing line between the two programs anymore like there used to be. So instead of thinking, oh, well, I'm not a first-time home buyer, I don't want an FHA loan, that's not really the truth anymore. Nowadays, I think it's fitting more and more of your everyday average family that wants to go out and buy a house, especially in Denver because we do have some higher home prices. And getting into a house and limiting how much you can qualify for under maybe conventional guidelines really limits what you can buy.
Yep.
So FHA is a huge avenue or channel for a lot of people out there nowadays that didn't used to be.
Yeah, it's definitely a great program, and it is limited to owner occupied people too. Not we can't do investment properties with FHA.
Right. Yep, correct.
The next one we have that's a government type loan is the VA loan, which is another awesome loan. You can you have to have obviously served in the military and have VA benefits, and when you do have those VA benefits, you get to do no money down with no mortgage insurance. So that's the best part about the VA loan is the no money down. There's a lot of other things that goes into a VA loan. The government really does want veterans to be able to own a home. So they are one of the easiest loans we have to do as far as guidelines and things like that. They allow us to do a lot more to get people qualified. So it's another loan that's really awesome.
Yeah, there's a lot of flexibility. And the one thing on VA loans that I really like is the fact that, no money down, and they also structure them where it allows you to help a veteran out with closing costs or different types of credits to help them get into the house. A lot of times what will happen, which you go buy a house as a veteran, you put down your earnest money to secure the property when you go under contract, and then sometimes you're getting some of that earnest money back because of the benefits that the VA program does. The only difference I will tell you on the VA programs, it does for most people, and again, this will be under a separate video for VA, but most people will have what they call a VA funding fee, which is kind of their form of mortgage insurance, but it's on top of the loan and it doesn't bump up your monthly payment like conventional or FHA do. It's not part of the monthly payment. So there are definitely some advantages to that, but that's the way the VA structures it to really get the veteran into the home, helps you qualify for more, and helps you afford more just from your own personal finances in your monthly budget.
Yeah, and with the VA loan, you can go up to 100%, up to $561,200 200 now in 2019. So
that's crazy, isn't it? That's awesome.
It is. Yeah. It used to be 417 a couple of years ago. So it's gone up quite a bit.
Well, and again, this is something, sorry, Dick, I don't want to interrupt because I think this is important. Just when people are sitting there looking at the programs and trying to figure out what they fit into and what they might want to do. If you do have veteran status, the other thing I will say about VA, which I really like especially for first-time home buyers, is their appraisal process is a little more stringent. So you're really getting kind of a second set of eyes at your inspection time. So you have your inspector go out, make sure everything's good. The VA appraisers also does a more thorough inspection than a normal appraiser does to make sure all the systems are in working order. So it really gives you that extra peace of mind when you're buying the house that things are as good as they can be.
Yep. Yeah, no, it's definitely a great loan. And like Pat said a minute ago, we are going to go deeper into each one of these loans. This is just kind of an overview of the basics of the loans and kind of how we start. But we'll have some more videos on the intricacies of the VA loans and the FHA and all these other types of loans if you decide to look into those a little further. So let's move on to conventional. So there's conventional loan. What does that mean, conventional loan?
Well, conventional, and I don't even know that's a fair term, but I think what it came out with years ago was here's the standards for lending, right? Back years ago when loans first came out, it was really only one type of loan. You put down your 20%, you bought a house, and you got it done through a bank, technically, right? And then the different mortgage backers come in and they start adjusting centralized guidelines and so on and so forth. And so I think the name conventional, being this is just a normal mortgage home loan, came about.
Right.
So technically,
not backed by the government like the FHA and VA type loans.
Correct.
There was government loans and conventional loans, and these conventional loans were, like you said, done by the banks.
Yeah, exactly. So conventional loans are good. I mean, obviously that's what everybody strives for. And really the main difference is going to be, let's say you compare buyers between FHA, VA, and conventional. The main difference is on a conventional loan, putting down the same amount of money, you're not going to have the upfront mortgage insurance that you would have on an FHA loan, and you're not going to have the funding fee that you're going to have on a VA loan. Obviously that can be offset by other perks on the other loans, but when you're comparing apples to apples, which a lot of times people will compare, okay, I have 5% to put down, right? Do I do FHA? Do I do VA? Do I do conventional? And so then we look at those two and we compare them. And in those cases, a lot of times conventional wins out, depending upon your credit score, conventional will win out and be the preferred choice to do.
Yep. Yeah, there's definitely, and there's different down payments we can do as little as 3% on conventional loans for first-time home buyers. Then we can do 5% is usually where we look at doing a conventional loan, but 10%, 8%, and it goes down from there up to 20%. You have mortgage insurance over 20%, and then after the 20%, there's no mortgage insurance on there anymore. The good thing about conventional loans, even if you do a 10% down, you can actually get rid of the mortgage insurance after a couple years just by amortization, or if you you pay more toward that to get it down to a 20% equity in the place.
That's a great point, because yeah, good. That's a good point. I'm glad you brought that up, because the one thing that's really important on FHA and VA, the FHA mortgage insurance is for the life of the loan. So as long as you have the FHA loan, doesn't matter if you put down 50%, you still have mortgage insurance, and as long as you have the loan, you're going to have it on there. So that's definitely a caveat to the FHA financing. VA, again, the funding fee is up front, so it's not necessarily quite the same. However, once you buy the house and that funding fee's on it, that's there. You don't ever get it back. Right. So once it's done, it's paid for and it's part of the deal.
Yep. So there's a lot of different, factors that go into which type of loan, and there's a lot of different types of conventional loans,
right,
that are in there, depending on, your situation, your credit score, those types of things. There are many different, types of loans inside that conventional, and conventional really means that it's Fannie Mae and Freddie Mac guidelines is what we're going by.
Right. And
that's what that is. And then the next one is after you get in the conventional loan limits. That's another thing. So they've moved up to 484, 350 for 2019. So anything under that, we can do a regular conventional loan. Now here in the Denver metro area, we can go to a high balance conventional loan up to that 561,200 in 2019.
And the guidelines are all basically the same, right? So if I still can put down 5% if I'm buying a house and I'm on a high balance conventional loan.
Yep. You can do 5% down, and that's the beauty of it. Because the next thing that we go into, if you get over those loan limits, is we get into a jumbo mortgage. And it used to be 417. Anything over 417 for a long time, that was a jumbo mortgage. Now the jumbo mortgages are over that 561,200.
Oh, yeah.
So anything over that now goes into the jumbo mortgages. And the jumbo mortgages are just, because they're higher loan amounts, they're higher, purchase prices, they are a little more stringent in their guidelines, a little bit more money down. We do have most jumbo mortgages for most lenders out there are like 20% down. We actually have some jumbo mortgages that are only 5% down. So we do have some unique programs, but most lenders out there are 20% down and a little harder guidelines to qualify for a jumbo mortgage. Right. So, but they go all the way up to, $3 million, on jumbo mortgages. And those are usually mortgages that are held by the bank or sold in the open market. They're not sold to Fannie Mae and Freddie Mac to have your loan. So
there's a channel. So what you just said is, if we're going to summarize this, we're thinking, conventional as little as 3% down if you're a first time home buyer, right?
Yep.
FHA would be 3.5% down regardless.
Yep.
And then VA is 0% down regardless. There are other options on VA, which we can talk about in the VA video, on VA jumbos and VA high balances, so on and so forth, but a little convoluted for now. But assume 0% down VA, 3.5% FHA, 3% for conventional first-time home buyers, or 5% if you've owned a home. What is it? The last 5 years or 3 years, Dick?
It's 3 years.
Yeah, 3 years. Okay. Yeah. And so there's a lot of options out there. Can we talk real quick on the loan programs about credit scores?
Sure.
Like the differences on credit scores. I know in FHA, you can get a loan in FHA if your credit score is as low as 580. So that's obviously very flexible. Where conventional, I think the conventional guidelines state that you can go as low as 620, right? However, there's a caveat to that. You have to have an automated underwriting approval for that.
Yep.
So what we see in general, and this is just a general rule of thumb, 26 years in the business at this point, to say that if your credit score is 640 or below, there's a pretty good chance, like high 90% chance, you're going to go FHA. Yep. Just because we're not seeing the automated approvals below that. But 640 and above, we're definitely seeing them on conventional, even though the guidelines state 620. Yep. Is that your experience as well?
Yep, and interest rates definitely are affected on your conventional loans. It goes way up if you're even below 680, and the mortgage insurance and all those things go up, so the lower your credit score, that's when we kind of move over to an FHA type of a loan for sure.
Right, because the one thing I think that's important is that, the average lifespan of a loan is under 5 years anyways, and it may not necessarily be you if you're watching this video, but I would tell you from the majority of people that we deal with and we see, repeat business from, it's under 5 years. So the idea behind the FHA loan and some of the caveats about mortgage insurance with FHA, they don't even play a big factor just because a lot of people don't hold the loans that long anyways. But even if they did, we can strategize to move up, so to speak, from FHA financing to conventional financing if your credit scores are lower or there's other reasons that are holding you back. The idea is that we want to be able to get you into a house.
Yep. Well, and that's why FHA is kind of thought of as a first-time home buyer loan. It's because it's usually the people that don't have a lot to put down, right? It's only 3.5%. And with that 3.5%, you can use gift money and things from relatives for that down payment. So right. They're real lenient on that type of thing too. And lower credit scores, where a lot of younger people haven't had a chance to build great credit scores. So that's kind of where we lean. But if you have 700 credit and 5% down, we're going to move you into a loan that's going to be a little cheaper for you up front and a little less monthly payment too. And that goes to the conventional loans and that type of thing. And so, yeah, that's basically the the basics of each loan program. And
Yeah.
I think we'll leave it there, and
Cool.
we will come back. And like we said, we're going to have videos on each one of these broken down further if you're interested in that.
Absolutely.
All right. Have a great day.